One morning, America woke up to panic. Bitcoin, our so-called digital gold, was bleeding. In a single night, over $200 billion vanished. Charts crashed, traders froze. But here's the crazy part. This wasn't just a market dip. This was something bigger. Because the real reason Bitcoin fell didn't start on Wall Street. It started in Washington.
And tonight, we're digging into how politics, power, and fear teamed up to crush the world's biggest crypto.
Bitcoin has always been unpredictable. It makes millionaires overnight and destroys them just as fast. But this crash? This one hit differently. Because everything, from Trump's new trade war to whale manipulation to vanishing liquidity, collided all at once. Let's break it down, piece by piece.
Just a few weeks earlier, everything looked perfect. The US announced something massive, a strategic Bitcoin reserve. Trump called it America's digital Fort Knox. Headlines exploded, investors rushed in. Everyone thought we were entering a golden era for crypto. But here's the thing about markets. When everyone's greedy, danger's already here. And while the world was celebrating, the whales were moving.
Whales, the few powerful wallets that hold nearly half of all Bitcoin. They move quietly, but when they do, the market shakes. Blockchain data showed something odd. Huge amounts of Bitcoin suddenly flowing into exchanges. That usually means one thing. They're getting ready to sell. And sure enough, within days, those coins started flooding the market. Prices slipped. Then fear kicked in. Because in crypto, fear spreads faster than any virus.
Then came the headline that flipped everything. President Donald Trump announced new tariffs on Chinese tech exports. Just like that, the US-China trade war was back. Wall Street panicked, and money rushed out of risky assets. Bitcoin, first to fall. Because when America sneezes, crypto catches pneumonia. Traders saw the uncertainty, the rising tension, and said, "I'm out." It was the perfect storm. Political shock meets over-leveraged market. Once Bitcoin slipped under $110,000, the dominoes started falling fast. Stop losses triggered. Leveraged traders got liquidated. Billions disappeared in minutes. People were waking up to find their accounts wiped clean. It wasn't a gradual fall. It was a cliff. The market didn't crash naturally. It was pushed off the edge.
But there was another problem. No buyers. The market had run out of fresh money. Stablecoin supplies were shrinking. Institutions had already pulled out. So when everyone started selling, there was no one left to catch the fall. It's like trying to sell your house when no one's looking. The price keeps dropping until someone finally says, "Fine, I'll take it." That's exactly what happened to Bitcoin. The buyers disappeared.
Now this is where it gets interesting. Analysts noticed something strange. The timing of those whale transfers lined up perfectly with big institutional sell-offs. Almost too perfectly. Was it coordination? Was it manipulation? No one can prove it, but the pattern's there. And if you've been in crypto long enough, you know one truth: big money doesn't move by accident.
After the chaos, Bitcoin finally stabilized around $108,000. The panic cooled down. Traders started saying the same thing they always do. This is the bottom. And maybe it is. Because every time Bitcoin crashes, it comes back stronger. That's its curse and its magic. Bitcoin didn't just fall because of numbers. It fell because of people. Fear, greed, politics, and power, all mixing into one explosive moment. Trump's trade war, whales manipulation, the Fed's uncertainty, it all collided. But here's what makes this story human. we still believe. Every crash shakes us, yet we always come back. Because Bitcoin isn't just an asset, it's a mirror of us. Our fear, our hope, our obsession with freedom. And that's why it'll never truly die.